You're listening to the Multifamily Mentor Show.
My name is Terrence Doyle.
And I'm Chris Lopez. You probably know us from the Bigger Pockets Real Estate Ride Along show. Well, now we're talking everything multifamily. We bring in top industry experts from around the country to come join us in our Denver studio for an in-depth, in-person conversation.
We're going to be diving deep into deals, underwriting, raising capital, and everything in between. Join the conversation.
All right, everyone, welcome back to another Tribe of Multifamily Mentor show at Bigger Pockets. Chris Lopez here, and I got my co-host Terrence Doyle. Terrence, how's it going, man?
Fantastic. I'm super excited about today.
I am too. You got two very young multifamily operators to fly up from Austin, Texas to come spend a day with us in Denver. Who are they?
Yeah, I've gotten to know these guys over the last couple months. I met them through social media. I just saw what they were doing, and I was like, I got to get to know these guys. I love what they're doing. I love their energy. I love their story. So couldn't be more excited to have them here in studio. It's actually, we've been talking for the last 4 or 5 months. This is the first time I've met them in person, so it's going to be awesome. We got Van and Kyle, and let's start off, let's just jump right into it. Van, give me your background. Tell me, you're from Austin. Give me, engineering, all the stuff. Tell me how you got here.
Absolutely. So I haven't been on the earth that long, like we noted. So I'll start way back, like all the way since basically like as far as my story of going like from professional world and trying to figure out like what I'm going to do with the last 6 years of my life or whatever. I've always sucked at school. I was diagnosed with ADD early on. Just didn't really have a direction, but I had like a lot of aptitude. So I was doing well on tests and stuff. As soon as we started getting homework, I started failing classes. It's like anything I had to do on my own, accord. And then I took that with me all the way through high school, ended up somehow, like someone must have accidentally let me into UT. And so I'm studying engineering there now. And basically I kind of stumbled into this world of very much so like you're told to, you get your degree, you get your job, it pays really well. The end. And then that's what your life is. And then I actually ended up doing an internship sophomore year.
Did that come from your parents?
So I will say, so my mom is super, like, I guess corporate-y. I don't know. Like I've never seen someone so happy and content in a 9 to 5, which is like more power to her. Like that's seriously, great, yeah. She's incredible at her job. She works in tech. And she, like I said, she moved to Austin 20 years ago. Obviously the tech industry there is amazing. Actually more realistically, more like 40 years ago. And so that's kind of been that side. And then my dad is not even anything. I wouldn't call him entrepreneurial and I wouldn't call him corporate. He's just like, he's a very like free-spirited kind of musician. He is a musician. Wow. And so I definitely had no like inclination towards entrepreneurship. Like I didn't even know it was a thing. And then I guess what I should say more accurately, before I did that internship, I started getting really interested in like entrepreneurship in general. And I started drinking the Gary Vee Kool-Aid. And I just saw that like you could.
It's a great Kool-Aid.
It is a fantastic Kool-Aid.
He's the man.
Highly
Shout
recommend.
out Gary Vee.
Shout out.
You'll be the next guest, Gary.
Oh, dude, That would be insane. But yeah, and then I kind of rode that wave into this internship. So sophomore year, I was like, heck yeah, no more homework. Like, like I didn't magically become good at school when I got to college. Trust me, it was a struggle. And I was like, finally, I can just go work, make money, be an engineer. This is this is the goal, right? This is like what I've been working for 22 years to get to. And then it sucked. And like a week in, I was like, I can't do this for the rest of my life. Like I go to work, it's okay. Like I like the people, and then I like go to the gym, and then I like do dishes, and then I go to bed. And that's what every single day is. There's no summer break. There's no winter break. Like what is going on? And I had this panic attack. And that's when I started really like turning the jets on entrepreneurship. And I started messing around with
So
everything.
How old were you in this? You had the light bulb moment of, I don't really want to work the 9 to 5 as an engineer, what I'm studying. How old were you?
This was 19 and a half.
Okay.
So yeah.
2.5 years ago?
Yeah, 2.5 years ago. And, let's see.
28 months ago?
Yeah, almost exactly 2 years ago.
Okay.
Holy crap. Yeah, no, I started work like flies. January 14th, 2019. Yeah. 2019. That's great. But yeah, and that's when I really started just messing around with a lot of stuff. Like this is the first time in my life, like I was making engineer money. So this is the first time I saw my bank account go higher than like $100. And, from I was making my car washes and stuff as a kid. Yeah. And then, and luckily I had my head screwed on straight enough, at least to understand that like I wanted that money to make more money, right? Like I didn't care about, clothes or anything. And so I started putting into the stock market, messing around with like Robinhood, Then found my way to like TD Ameritrade, started day trading. Had no idea what I was doing, but told myself I did because I was watching YouTube videos. And then started messing around with drop shipping too. So I was trying to like sell dog toothbrushes to people I don't know. And I thought knew what I was doing with Facebook ads, just wasting money on everything. Because I kind of was like chasing like shiny object syndrome. I just saw people making a lot of money doing a lot of things, riding in jets and Lambos. And I just wanted to kind of, really, it wasn't a vanity thing. Like I wasn't chasing that necessarily. I just wanted to get away from whatever the heck I was doing there at that job. And eventually I kind of stumbled. Like I said, I did pretty much anything you can name, messing around with like cryptocurrency, options trading, drop shipping, like small business in general, just trying to sell my friends shirts and stuff. And then eventually stumbled into real estate. And that was the first time that my kind of analytical mind really was like, whoa, this makes a lot of sense. Like everything from like principal pay down, appreciation, even depreciation, just like the fact that you like cash flow, is one of the most powerful things that I learned. Just like the fact that I don't have to hope this thing just blows up and then I pop it at the right time. I can just have something that pays me every month. And then that's kind of what I set my sights on. And then from there, I really decided, okay, that's going to be my thing. Like I'm tired of this engineering working thing. Like, not that it's not a noble pursuit or anything. My head is a little too loose for me to like focus on something that succinct or I guess to like put all of my effort towards such like small tasks. I was like, I need to be an investor. I need to be an entrepreneur. Like I have to be driving the ship to some degree in my life. And then that's when I decided I was going to be a real estate investor. And so I said, okay, when I'm done with this internship, it was 9 months. So I took 1 semester off of school, January through August. And I worked full time. And I was like, okay, as soon as I get back to school in the fall, buying a duplex, going to rent out the other half. It's going to be amazing. It's going to pay me, whatever. And I'm going to live off
$250.
ramen.
Yeah.
Exactly. I'm going to live off of ramen and, continue selling shirts until I can be a full-time investor. And then at some point, right before I was about to get a duplex, I ended up getting lunch with Kyle.
Who you grew up with?
Yeah, so
or
me and
you've
Kyle,
known since high school? Or?
Right, we knew each other. We knew of each other in high school.
Okay.
We kind of like had a lot of adjacent groups of friends, and I know we were like at the same prom party or something senior year. That was like the first time we ever actually talked. And then we kind of met up because I saw what he was doing, and honestly, like the vain part of me, like the entrepreneur in me, was pissed that someone was doing better than me, and I was like, okay, let's see what this dude's about. And then he kind of exposed me to the world of syndication and multifamily and like scale, because I had seen all the numbers and I knew that real estate was the answer, but I'd never really thought outside the box. And Kyle kind of helped me do that, and then now we're here. So
here we are. So that's a great transition into Kyle's background and bio, which I find fascinating. We have a lot in common when it comes to, we both played college sports. You played soccer, I played basketball. Mm-hmm. So catch us up to speed up to that point where you are sitting down with Van. He wants to buy a duplex and you're convincing him not to. Go all the way there.
Yeah. So, I mean, me and Van had so many very similar things in our story that when I sat down with him at lunch that day, it was just so easy for me to realize, like, he was going through the thing that I just went through. I need to make sure that he skips that step and gets to multifamily because of all the things he talked about, scale, et cetera. And at that point, I had just done a 107 unit in Louisville and a 12 unit in Atlanta. So I had a 119 unit portfolio, and we had sat down. Our mutual friend Joe connected us from high school, and Van has always been a super smart guy. I've always known that he was a really smart guy. And he also, same thing he said, he thought he wanted something. He spent his whole life trying to get there. He had a taste of it and realized that's absolutely not what I wanted. And I had the same exact experience where I spent my whole entire life training to be a Division I athlete, hopefully a professional athlete. And then I get to college, Division I scholarship, like my sophomore year of high school.
Where are you going to school?
UC Davis.
Okay.
So
you were originally from Austin?
Yeah, Austin. Okay. Yeah. So I basically was like, okay, went to California in one of the better conferences, playing Division I soccer. Everything should be great. I'm also studying pre-med. I'm going to be a doctor. Wow. Everything's going to be great. Like, this is an ideal life. And then you get there and you're not happy at all. And I think similar to Van, right? Engineers are supposed to be really smart, high-paid individuals who are really happy and love their job, but sometimes it's just not for you. And I think, doctors the same way. You're high-paid, it's great. Sometimes it's just not for you. 12 years of school wasn't for me. Division I sports, it wasn't really what I was looking for. I liked the game. I liked the challenge of it, but I didn't love the political nature at that level, because at that level, inherently, like, people are all so good that you have to find ways to get an edge, and some of those ways are less than things that I didn't want to do necessarily. So I basically came to that realization, and I think Van I was hearing Van's story, hearing the same exact things that I was going through. And I was just like, man, I really want to help this kid out. We're so similar. And I think we could work great together. Let's see what he can do if I push him towards multifamily. And then he's actually closed a 300 something unit since that conversation. So Van is now, holds more units than I do in multifamily. So it's just so great to watch, someone that you believe in so much get to do exactly what they wanted to do. It's awesome.
Yeah. So Van, you went from wanting to buy a duplex to buying 337 units, which is fascinating. I really want to touch on that. Let's go. I want to close the loop on your story, Kyle, because I think you skipped over something that I personally think is really interesting and valuable for the audience. And that is, you were a junior and you're playing Division I soccer, and then you actually drop out, correct, to go pursue multifamily. So walk us through how that all went down, how your parents felt about that, and just your mentality through that process, and then let's get into the deals.
Yeah. So I was actually a sophomore in school, and I had just kind of come to this point of really disliking pre-med, and also reading Rich Dad Poor Dad at a really key time where I was pretty disillusioned with everything that I had currently worked to, and had realized that there was another way to do this, and that I didn't have to trade my time for money. And so I basically called my coach and told him that, thanks for recruiting me, but I'm going to go a different way with this. Went to the dean's office and unenrolled, and they were like, "Sir, do you know what you're doing?" And I was like, "Yeah, I promise I know what I'm doing." They're like, "Are you really sure?" And then I obviously signed the papers and unenrolled from school, but that was definitely stressful. And I didn't even tell my mom until 6 months later when I closed my first deal. I told my dad, obviously, because, I got to tell somebody. And we figured, hey, let's make a pact and let's see if we can make this
thing
work.
So you did this in December?
Yeah, like January of my sophomore year.
Which was what, 2019?
Yeah, 2019, January.
So January of 2019, you disenrolled but stayed on campus?
Yeah, stayed on campus because I still had my lease. I got a job at a senior living facility and worked like nights and brutal graveyard shifts, helping senior citizens wake up in the morning.
Working a job at night.
Yeah.
Making $15 an hour.
Yeah. Paying for food, obviously, because I have to exist.
Right.
And then
and for rent.
Yeah, and rent. And then then I'm basically just going to meetups when I can, calling everyone that I can, waking up at 4, doing my miracle morning, then going to work 6 a.m. shift, and then getting off, meeting with as many people as I can, reading all day, going to bed at like midnight, waking up at 4 again. I did that for 6 months, and then I got a deal under contract in Louisville. I had been raising money in the Bay Area for it, where I was going to school, and then ended up closing on that. Then I told my mom that, hey, I haven't been going to school for 6 months, and that was a conversation. And then you moved
back to Austin and met with Van.
Yeah.
So here we are at the lunch. Van is looking for a duplex, and you're telling him, hey, I was able to skip a couple steps. I went from a duplex to closing on 107 units. You should think about the same thing. So Van, let's go back to you and tell us about how from that lunch you went to closing a 330 unit deal with a pretty well-known operator, and you guys closed a deal in North Carolina. So walk us through kind of how that all came about and your mentality and how that went down.
Yeah, so when I first heard Kyle talking about like the syndication model, for one, I'd never heard of it. The word syndication, I know there's like some action movie called Syndicate or something. Yeah,
meaning sometimes out there. Yeah.
And then so I kind of looked into it and I was like, wow, this is really like, this is the power of leverage multiplied. Like this is, not only is it like leverage of capital, but it's leverage of like human capital, and it's leverage of more things than that. And I looked into it and I kind of had the mindset still of like, this is me. Like I'm going to find the deal and then fund it and then run it. And then I just, I was like, I'm going to take on this whole thing.
Right.
And then, like I said, as soon as we had that lunch, I was like, okay, send me your books, your podcast. Like I'm going to do it all. I did it all. I feel like I just absolute information overload for like a month. And then I started reaching out to brokers and investors, and I got super active on like LinkedIn. And I just started talking to as many people as I could, trying to get a deal, and realized eventually, like I was trying to balance like drive with humility. And I kind of realized like, man, I really don't know what I'm doing. Not even in like a self-deprecating way. Like I don't know what I'm doing. So then I kind of
So initially you were going to do this all on your own.
Right.
So when he tells you 107 units, in your mind, you're like, okay, I'm going to go find a deal, tie it up, raise the money, operate it, do the whole thing.
Right.
Wow.
That's what I was thinking. And again,
I love the mentality.
It really was the fact
At 21
that, like,
years old, I'm going to do this whole thing myself.
I think it was kind of a competition thing too.
So you skipped over that part when Kyle told you he partnered with someone. You're like, no, I don't need to partner. I'll do it myself.
Well, I don't know if that actually came up too, because I think it's this weird psychological like competition thing. I don't know. But when Kyle had said that, I was like, there's no reason he's doing this and I'm not. Like, and so that was kind of the mentality I brought. And then eventually I kind of realized like, no, I need to kind of humble myself. Like I need to figure out like some other way into this. And I I didn't really say I'm going to be a capital raiser. I
Yeah.
said like, how can I just get in on a deal? I was like, whatever I need to do to like have my name on the company paperwork
Yeah.
as a, managing member, like what do I need to do to get into a deal? And so I started reaching out to a bunch of like, in-betweener operators. So there's a couple options. Like I can either start from the ground up, or I can go like be a salaried employee at a firm, or I can find someone in the middle. I can add value to them and then try to weasel my way into a deal. And like, maybe I can help them underwrite. Maybe I can help them. At the time, I didn't really think about raising money as like a thing. But just any way I can like run their social media, anything I can do to get in on a deal. And I ended up meeting my, kind of partner, Andy McMullen out of San Diego. And he was really excited about it. We meshed on a lot of things. We just look at the world a lot of the same way. And
how'd you meet him? Andy?
LinkedIn.
Okay.
Which
so you were just on LinkedIn, messaging people, active,
oh my
posting.
gosh.
Yeah.
If you could see my Google Calendar, it was insane. I was probably talking to 10 people a day. And not
So
necessarily.
you're going to school at UT and still like
Yeah.
trying to network in between classes.
Right.
And
also, let's say, I think we got lunch in like January of 2020. So I had a couple months I went to like 5 meetups. Like I got super active in real life for as long as I could. What, like 2 months?
so a year ago.
Yeah,
So
a year
a year ago you guys had lunch.
Yeah.
Yeah.
Wow. So you got right to it.
Yeah. And so literally, like I said, I got really going to a lot of meetups and stuff. It's so funny talking about this. I just now remember this. But like, yeah, I was, making moves in Austin. I was talking to people. I was getting lunch and stuff. And then, of course, March hit and everything changed, which was a huge thing for me, actually, because I'm no longer the 20-year-old who has no idea what he's doing with no facial hair,
Right.
with, who like has no leverage coming into a room. Now I can hop, like I was on Zoom just 24/7, did not go to class. In fact, I actually have class right now, by the way, this first day of school.
Wow.
Like literally just every single day, I was just on Zoom meetings, not really trying to get anything from anyone, not trying to raise money.
Yeah.
I was just learning as much as I
Just
possibly
absorbing.
could. Yeah.
what's
and
going on,
I
yeah.
would just find people who close deals, and I was like, how do you do this? And I was just talking to them, and eventually I stumbled upon Andy, and he was like, man, I'm kind of looking for someone to help me build kind of the marketing side. He's really new to that, and just like systems in general. And I was like, dude, I will do whatever you want. Just like get me in on a deal. And that's essentially what happened, long story short.
So what did you do? Because I mean, like, what you're saying sounds simple, but like, I talked to so many people. They will grind away at 2 hours at this, 1 hour at this, and direct message people. And then you start a conversation because half don't respond to you at best. Then they have a conversation. They move it to a Zoom call. Like, what was your tactical process for doing that?
Yeah, so literally my tactical process was LinkedIn, just sliding in as many DMs as I could. I think
So
I
you
did
went
that
for
to Terrence
quantity,
too.
huh?
Yeah, literally I would find people, and then I could do a quick smell test, know if they're legit, and then I would just say, hey, like, I'm new to this space. I'm trying to learn about syndication. I don't want anything from you. Not selling you anything. Would you just hop on a 30-minute call? And I probably got like a 25% success rate. And
That's really good.
Yeah, because I mean, honestly, like especially on LinkedIn, it's kind of an intimate feel. Not anymore. I mean, now everyone's selling health insurance or whatever on LinkedIn.
That's so true.
But like at the time when I was doing it, people really wanted to talk to me, and they're like, who are you? What are you doing? And I'm just literally asking, like, I'm trying to do a deal. Like, how does this work? Like, I'm not selling you anything. I just literally want to know what's going on. And I think people actually were like attentive to that. And I think the other funny thing, like the psychological thing, is I think it's called like the Ben Franklin effect or whatever. It's like when you make someone do a favor for you, they like you because they feel attached to you. I don't know. You could probably explain it
Yeah,
better.
I mean, the basic principle behind it is like, you don't do something for someone you don't like. So if I ask you to turn the lights off or turn them down and you get up, you're subconsciously going to be like, well, why would I do that for Kyle? I must like him at least a little bit. And that's kind of Ben Franklin's thing. And honestly, I think Van has doing a lot of things really well that he's not like aware that they're unique things. Like on these reach outs and DMs, I'm sure that he's doing things more than just saying like, hello. I think what Van does a really good job at is he actually does want to get to know people, like genuinely.
Mm-hmm.
I think that Van does a really good job of not making conversations about him. Van's the kind of guy that you can go and hang out with and he'll just listen to you for a long time. And I think that that's really what these DMs are about. If you're going to talk to anybody or reach out to anyone in business, you can't make it like, I see so many people doing this that are new to real estate. They'll be like, oh, I'm I'm Van Hayge and I have 300 units and this is my bio. Like, you want to meet with me, right? And like, that's not the way to go about it. You have to say, hey, I know a lot about you because I took the time to research you. I think you're really cool. I want to hear even more about you. And I think Van's doing that just naturally, but that is just a quality Van uniquely has that I know a lot of people don't have. So when you hear like, oh, this guy's DMing people and having this success, like, why am I not doing it? Well, it's probably because he's going about it slightly differently and he just doesn't realize how special that is. But really, he's more concerned about the other party in that thing. And if you can recreate that, I think you'll have the same success as Van.
I think a funny thing about me is like, I tend to have no ego to a fault. Like me and Kyle joke about how we kind of come like we're super, super similar people, but in some things we just like are, we're kind of converging from like opposite ends of the spectrum. So like, any problem I've ever had with like believing in myself or whatever kind of shows in those DMs. So like literally, I was thinking nothing of myself. I'm hopping in these DMs like desperate, like please give me anything, like give me one drop of water. Like I would read up on these people and be like, you are the real deal and I suck. Like tell me anything. Like anything you give me will be amazing. And I feel like that really puts people in a position of like, oh, I can help this kid out, and that makes me like them.
Right.
So. Well, I can tell you too. I think coming from a point of just like you're genuine and willing to learn. I think that's something that is so many people overlook. They want to come across acting like they're the greatest thing, whatever. I got this. No, just if you're humble, like, hey, I'm new to this. I want to learn this. I looked at you. I like it. I got 3 questions. Like when people ask me that, like I'm like, cool. I want to talk to you. Like it's fun to talk to people because that was where you were 15 years ago. Like it's.
Right.
Everyone's been there.
Yeah.
If you can be that person who's actually curious about learning, because the people who are curious about learning are the people who are going to succeed, because you can only fake so much. Eventually you do have to know what the heck you're doing. And that will actually come to a head. If you're not asking those questions now, then you're going to fail. And so when you see someone asking questions early on, you're like, oh, that person's got the right habits. They're going to succeed. I want to be a part of that success. And yeah.
So I love boiling things down to like a punchline. So I think for the audience that's listening, that has a lot in common with you guys, where you guys are young, didn't have a lot of money, didn't have a big resume, didn't have money, but wanted to get into multifamily. You guys were reaching out on social media, and the common psychological factor that every human being has is they love to talk about themselves. So if someone's asking a lot of questions, they're going to be inclined to want to get on the phone, get on a Zoom, and talk about themselves. And I think that's something that people really need to hear. That if you're getting on the phone with the idea that, hey, I'm going to go sell myself, tell them my story, you're missing the boat. It has to be, I want to get on this call with Van and Kyle or whoever the person is, and I really want to understand them better, and I want to ask a bunch of questions, and I want to come across like that. That's going to be a winning formula long term versus I'm going to get on the phone and tell them a lot about me and why I'm so great and why they should want to partner with me. And I think that that's where the mentality you guys had has led to a lot of success at an early age versus a lot of people that are maybe having a different mentality of, hey, I want to sell myself and convince this person that I am really special and they should want to come work with me. Right. And I think that's something that an action point that the audience can take away. So walk me through. I really want to understand. You were doing all these calls. You found Andy, and then how did that lead to the deal? So give us, because then I want to get into the deals you guys are working on.
Yeah, so that was another thing too. Like, I don't necessarily think the way I did it is the right way or the only way, but like, I think you could definitely go direct to an operator. But what Andy had, what he's really good at is relationships. And he just, same thing. He's a super, like one of the most down-to-earth, humble guys you'll meet. And he's doing the same thing. I mean, he's been in this industry for 20 years, but he's calling, he's meeting people, like seeing where he can add value. And he had a pretty good relationship with Matt Faircloth, who's like obviously super well-known real estate investor. I know he's really big on BiggerPockets and stuff. And Andy said, hey, I think we're going to have a opportunity to go raise for Matt's deal. Like, how does that sound? And I was like, that sounds pretty awesome. He's like, yeah, okay. So it's 336 units in North Carolina. We got a $2 million COVID discount on it. Should be good. And I'm like, sweet. I'm like,
so how much was the deal and how much was the raise?
So the deal was $18.5 million. Like I said, it was under contract in 2020 for $20.5 million.
Wow.
And, due to some COVID complications and essentially obviously the guy terminating the contract, we were able to pick it up for 18.5, which is, again, insane. I mean, that like
a 10% discount. Yeah. On
right.
Something that large is rare.
Yeah. And we talk about conservative underwriting. This thing was like, I was jumping out of my clothes. I was so excited about how amazing this deal was. And again, it was really easy to to sell to people because I mean, the deal was, I mean, it's a solid deal, and even then, I mean, now we're seeing the fruits of the conservative underwriting, getting like double the rents we were projected to and stuff like.
Wow.
And obviously, you know, Matt Faircloth is one of the strongest operators in the game, so just an all-around amazing opportunity to be in. So, like I said, really the way it worked out is like I found Andy, who, you know, I was just looking for someone who I knew that he had a couple thousand units. He's been in the industry. He's cycled through a lot of deals. Like he knows what he's doing, whether it's his deal or whoever's deal. Like he is a gatekeeper to doing a deal. And so the way it worked out, which I wasn't planning on, but it ended up like me being a fund who's raising for another deal. And that's how I got into a deal. It easily could have been Andy said, hey, you know, I got a 15 unit in my backyard. I'm going to buy with you. You know, you want to come in and I'll fund the whole thing and I'll help you run it or whatever. You know, it could have easily been that. But yeah.
So you and Andy raised money for Matt's deal. And how much was the total raise and what did you guys raise?
Oh yeah, I totally didn't even answer the question. Yeah, so it was $18.5 million purchase price, and we raised about $10 million, I think, $9 to $10 million. So there was a lot of exterior capex and stuff.
Wow.
And again, another just blessing, huge part of the project. It was much more than just like value add. You know, it was like human value add. So they're going in, just fixing the community, the pools, like making. They're partnering with like Apartment Life. Giving all the tenants free like Dave Ramsey Plus, like budgeting and stuff. So like this, it's just like amazing to have my name attached to like such a like humanitarian project too.
Right.
You know? So yeah, big raise, but we, I guess I won't disclose how much we raised specifically, but we were able to come in and take just a chunk of the partnership for essentially raising like a certain part of the deal. And I think Matt Faircloth is like super excited to, just because he's a beast and he's. Yeah. You know, he's really good at like I said, it's like a long-term relationship thing. Yeah. Like everyone involved that I've met is just an amazing person. Like, you know, from Andy to Matt and everyone in between, like, yeah, just a great opportunity.
Yeah. What a great story.
Yeah.
Super impressive. I love that you guys were able to go in there. You were able to find a way to get into a deal, which came from your conversation with Kyle, and you learned a ton from it. And now that's led to what you guys are doing now. So Kyle, talk to us about your deal, how it came about, and then let's transition into what you and Van are working on in Austin.
Yeah, so I'll just give you the quick summary. It's a 107-unit deal in Louisville, $4.5 million purchase price, and we basically bought it at 106 units, found a downed unit, so we bought it for 107. We actually bought 107 units, but we bought it at 106 price point, so that was already value add day one, and then we had a doctor owning the property who was paying like a charity case uncle basically $90K a year to be a manager, which of course the average payroll for that is like $35 to $45K. So cutting that day one was also a huge value add, and we're talking like on a 6 cap, cutting $45K day one, having extra units, extra $12,000 NOI right there from the unit. So it just day one made a lot of sense. And the way I found that deal was I had raised all the capital in the Bay Area from being a speaker at a meetup, which took a little bit of time, but I kept going to the meetup, met the host, asked if I could have my own segment, eventually got my own segment speaking on stage, getting a little bit better at public speaking, and having people start to see me in a different way. Because at first I was going there as just the cute kid who's like putting the name tags on everyone and then cleaning the chairs up afterwards. But once I got on stage and started talking about multifamily, people were like, okay, maybe I should give this kid a time of day. Let's go have coffee with this guy. So every week I would have like 3 or 4 people who'd come up to me and say like, I don't know who you are, but it's a great talk. I'd love to meet with you for coffee and see what happens. And then, you know, so many of those meetings led to absolutely nothing, but some of them led to, you know, yeses, and some of them led to, hey, not me, but I'll talk to my friend. And then from there, I was able to build a decent capital base, and decided I need to go meet operators. So I went to a Jake and Gino event in Jacksonville, Florida. I bought a red eye with the little money I had, landed in Dallas overnight, and then to Charlotte, and then to Jacksonville the day.
Sounds like an international.
No, it was ridiculous. I mean, it was like $90 is all I could afford. So I arrived like at like 10 a.m. The event's at noon that day. And I'm like, took a shower in the airport, paid like $2 or like $20 at like the airport to take like a weird shower they had there. So then I show up to the event, and I basically was just telling people like how much I wanted this, because at that point, I mean, I was so desperate. I was working at a senior living facility, just dropped out of school, I had absolutely no other options, and like was like, hey man, I have this capital, soft commitments, like somebody please help me out. Basically, was almost
roughly
like,
how much do you think you had at that point soft circled?
I mean, soft commitment, I probably like 1.5, but we all know how soft commitments
Yeah.
go. It's probably 50% of that.
Right.
And so I was, that's obviously,
That's still a lot of money.
it's still a lot of money
Right.
for sure. But at the end of the day, like we're talking larger multifamily operators at a Jake and Gino event. Sometimes people aren't going to take that very seriously, but I had so much like fire and hunger and like almost desperation at that point to just like have someone believe in me. And thankfully I built a relationship with a guy, Eli, who was also in his 20s, the later 20s, and was like, hey man, I don't know if you're legit or whatever, but I want to give you a chance. And so he showed me a deal in Louisville, and I basically said, hey, I'll bring this money, but I'd love to learn every single part of the acquisition phase and as much as I possibly can about operations. So like if you can put me on mute in the conference calls in the background, like I just want to hear what you do so I can become an operator one day. And so we came up with that, that deal. I brought the capital. He operates the deal and did all of the, oversight of the actual real estate aspect of
And
things.
did you bring all the capital?
I brought majority of the capital, but he also brought a lot of capital as well. So
And he's operating that deal right now.
yeah,
in
and
Louisville.
it's on the market as well. So
Oh, you guys are selling it?
We're potentially selling it right now as well for I think around $7 million.
And you bought it for 4?
Yeah, 4.5.
Nice.
Oh, incredible.
Yeah, so we'll see what happens.
And you've
with all
operated it for 2 years?
we bought it in June 2019,
June of 2019.
Yeah.
And the rents were what when you bought it?
like 765,
And what is it now?
815 ish.
Nice.
Yeah.
And he lives in Louisville?
No, he doesn't live in Louisville. He lives in Minnesota.
He lives
But-
in Minnesota and manages it?
Yeah. So PMR manages it full time, which is third party, but he oversees their management process and goes to Louisville and drives over there.
And this has been a good experience and a deal you would do with them again?
Yeah, absolutely. Yeah. PMR, definitely a great company.
Cool.
Shout out PMR, yeah, for sure.
Really?
So I want to loop back before we get in the deal, Terrence, because I mean, you're a couple things in your story there, Kyle, is very impressive. Going back to the that was a real estate meetup you're going to in the Davis or Sacramento?
Yeah, Sacramento area.
Okay, in Sacramento. Like, how'd you get the spot to go on stage to speak?
Yeah, so there was the meetup host, and basically I figured I can roll the dice and see who here would be able to help me, or I can focus on the one person I'm absolutely sure can offer value, and that's the host. So from there, I literally said, is there anything I can do to help you out? And at first, I just came up and told him about his marketing, how I actually found his meetup, and I was like, hey, I found it on Meetup. You should do more stuff on Meetup. He's like, oh, great tip. Second time I went back, brought a friend. I was like, hey, I'm bringing people to your meetup. So now it's like he's giving me feedback. He's bringing people to my event, which is all I really want, people to come to my event. And then the third time I was like, can I help with like name tags or picking up chairs? So I literally just did name tags and like check people in for 4 or 5 meetups. Like 2 months later, I saw a gap in the speaker lineup because I was also booking speakers for the meetup too. And I was like, hey, no one's speaking next week. Can I speak? And he was like, well, you mean you're the guy booking speakers and you're not booking anyone, so I guess you can. And I came up and I did a talk on multifamily because it was predominantly like a flipper and single family duplex kind of thing.
Okay.
And I was like, well, no one really knows about commercial real estate here. That's something I'm interested in. I can give you like a 15-minute talk. Won't take up too much of your time.
Just a high-level overview?
Yeah, just high level. Let me get up on stage. Let me wear a suit. Let me look not like a 22-year-old for a second or a 20-year-old at the time. And so I did that. And then I got a really good response just because I think it was so different from what everyone was used to. And so people were like, yeah, bring that kid back. And then I ended up getting a little segment. So I'd have like a 15-minute segment called like You Can Do It, if you can
It was
imagine.
like Kyle's weekly or whatever
exactly.
monthly segment on there. So a couple of things. We were actually talking about this before we hit record on here, and you did a lot of small things, which is one of the books you referenced. Like, talk about that, because those small things, I think so many people overlook, and like they're like, oh, I don't want to put name tags. I don't want to stack chairs. I don't
just
want to
do a big deal.
Yeah, I just want to do
I don't go straight to the 100 unit.
Yeah.
So speak on that, because that's such like, it's not glorious, but like it leads to like really good things.
Yeah, I mean, there's a great book on it, The Compound Effect, that talks just about doing these small things every day. And I mean, even one of the illustrations in the book is like, if you just like don't eat if you just switch out like soda for water essentially, and then you watch that caloric like curve over a year of not doing that, like you end up losing several pounds doing that, like just a simple change. And that's just an illustration, but essentially you don't have to do as much as you think to get big results. You just have to do like one very small thing that's completely manageable.
Just make your bed.
Yeah, just make your bed. That's another great, make your
Start with
bed.
that tomorrow.
Exactly.
Everyone go make your bed.
Your story, I mean, that's what, less than basically 2 years of compounding.
Yeah.
And I mean, you went from there to being a nobody. Now you've done a couple of big deals. Like, that's super impressive. And like, imagine play it over like not 2 years, but 20 years. Like, that leads to big things.
Yeah, exactly. And it comes full circle with the thing we were talking about with Van. It's just being humble and being willing to put yourself in those situations. I mean, I was literally, my job was washing old women at a senior living facility at 6 a.m. for like 6 months. And like, I had to do that. And it taught me a lot of great lessons. It was uncomfortable, but I mean, they were great people and it taught me a great lesson in humility. But if I wasn't willing to put myself in that situation, I would have had to move back to Austin with my parents. I wouldn't have been able to be in Sacramento, period, having those opportunities to meet people. So like, you have to understand that it's not going to be pretty. It's going to kind of suck. And you have to, I guess, embrace the suck, to steal a cliche, and just lean into it and find a way to make it happen.
What was your mindset though? Because I can imagine, I mean, you're going to Davis, which is a very good school. You're a Division I athlete. You're doing pre-med, so lots of great check boxes. And now you're out of school and you're bathing people. Like, you've had to gone through some mental, like, internal debates, right? Like,
oh yeah,
like,
yeah, absolutely.
How'd you carry through that and not
how many times did you want to quit and go back to the coach and say, hey, will you take me back?
I mean, I think so many times. I mean, that's the beauty of burning the boats and forcing yourself to have only one solution, because you just get so creative when you give yourself no other options. I think we underestimate what we can do, and we really only know when we fully put ourselves in the situations. I mean, like, you just have to say yes and trust that you'll figure it out and have some sort of faith that it'll all work out. And honestly, for me, I know that I would have quit if I had another option. I absolutely would have quit. There's no way I wouldn't have quit. There were so many mornings where, like, there were so many times I'd get back from work after, like, just being up for, 20 hours and be in the shower and just, like, question every single thing that you're doing. And, like, how dumb am I that I just gave up my entire thing that I worked for? And, like, and you just putting your head on the wall and letting the water hit you, and you're just like, what am I doing with my life? But if you have another option, I definitely would have quit in those situations. But I knew, like, you kind of have to just slap yourself in the face and be like, well, dude, what are you going to do? Go back and move in with your parents and, like, have absolutely, like, and just, what are you going to do, man? Like, that scared me more than anything else. So I just kept moving forward and moving forward and moving forward, and then things happened.
So let's jump on this deal, because I know you got to head out here soon, Terrence. So tell us about this deal that you guys are working on in Austin.
Yeah, so you guys both did individual syndications. You guys have lunch. Van goes on to close 337. You did your deals. And then catch us up to speed on how you guys are, formed a partnership now, which I'm super big fan of. I think you guys are going to crush it. Anyone in Texas that's looking to buy Texas multifamily should definitely be looking you guys up. So then you guys form a partnership, and you guys went through a competitive bidding process for this project. So walk us through that process and this property.
Yeah. So I'll start, like, at least for me, coming out of the deal, obviously, like, as part of the general partnership, like, I'm involved with the property, a lot, obviously, but I also decided that, like, what really excited me when I was even, like, in the early days of just, like, wanting to get a duplex, was being a real estate investor and having a tenant that I'm responsible for, and, like, a property that I'm responsible for. And I think that's really what I wanted to chase again. Like, I wanted to be an operator. I wanted to be a real estate investor. And I was like, even if that means going smaller, actually Ryan Smith, he's a really big operator in, like, mobile home parks and self-storage. He came down to Austin because he was touring one of his units, and I grabbed Kyle and we went and toured with him. And just watching him tour this thing that was his, that he bought, talking to his property manager from a company that he owns, it just really was, like, infectious, and it just, like, relit the fire. And I was like, this is what I want to do. Like, I want to start a firm from the ground up. Like, I want to be an investor, not just a capital raiser, not just a private equity guy. I can get some firm to pay me $200,000 a year to do that, to just raise money. I was like, I want to be an investor. And so that's when I got the bug again for, like, I need to buy a deal. And that's, I think, kind of similar to you, right, Kyle?
Yeah, I like he said, I like raising capital. It's definitely something I'm good at. It's definitely fun, the marketing aspect. But ultimately, I think we both got into this for operating. And also getting to talk to you monthly, Terrence, was a huge impetus for us to continue to think, like, how can we change strategy to get to do what this guy's doing? Because watching you run around like crazy is really actually fun. Like, you're constantly like, hey, I got to jump. Hey, I got to run. Hey, I got to be here. And, like, that is something that we are, like, is much more, like, fulfilling for us personally, having your hands on something tangible.
Right.
And seeing you be passionate about that was also a huge driving force for that too. So just noticing the people we looked up to weren't doing what we were doing. And so we were like, we got to change to start doing what they're doing, honestly.
Yeah. And I definitely don't want to disparage any capital raisers, because, like, there's a spot in this industry for everyone. But, like, just the way my brain's wired, the way your brain's wired, like Kyle said, watching you run properties and, like, hearing your story about how you, like, founded the Verico and stuff, and, like, how you learned about construction and all this stuff, it was just super contagious. And I was just, like, about to jump out of my chair, because I was like, man, that's what I want to do. Like, I feel like as a capital raiser, I'm not learning as much as I want to. I was like, I'm learning how to raise money and like I'm learning from a distance how deals go, but it's like I want to be hands-on. I want to know about the floors and the walls and the ceilings and the paint and the everything that no one wants to do. Like, and I think that's where like some of the most valuable things in life are, is like the stuff that people tend to brush off or like don't want to do. Like really knowing everything from the ground up is like so important.
Yeah, totally. Like I think everything, you have to start somewhere, and capital raising is actually like one of the hardest things. Asking people for money is super difficult, and I think we talked a lot about how to do that effectively, which really starts with solving a problem and asking questions. But the most valuable thing that anybody can do is really know how to do any one thing from A to Z, and that really comes down to, property management really comes down to how do you make a tenant's experience safer and more comfortable? How do you deliver a great property to someone and help them have a great experience? And that really comes down to, marketing and maintenance, and so learning those nuances inside of that, and then learning the construction aspect and learning how to, communicate with brokers effectively to where they're motivated to bring you deals, all those things. That's just the next level, of being able to add value to your own capital and other people's capital. So I think I started very similar to you. It's all building blocks, and you guys had to raise money first and get into those deals and see Matt and see Eli do those things, and then that was able to give you guys the confidence to say, hey, if Eli can do it and Matt can do it, I can do it. And then here we are today. So let's talk about the Berkeley property. Tell us how that came about. Tell us about the deal, why it made sense financially, some of the underwriting.
Yeah. So, I mean, a 72-unit building in Austin, Texas, priced at around $110 a door, which for Austin, I know this is an insane statement, but that's actually a little bit underpriced for the Austin market. We're typically looking at $120 to $130 a door. So we were liking the price point immediately. We found the broker just Newmark, Knight and Frank, so one of the bigger brokerages in Austin. I obviously had reached out to them pretty early on, I think 2020 early on. So it took the whole year in December to finally get that relationship and get that look. And we went and toured the property, and
it wasn't listed, correct?
No, I think it actually was it listed. I don't know. It wasn't officially listed. Yeah. I mean, the word off market.
They had the listing.
Yeah.
But they were just soft circling it with people they trusted.
You got to be like approved through their website.
That they had already built a relationship with you, and they were just showing it to it because they wanted to double end it.
Yeah.
They weren't going to list it because they didn't. They were going to.
It actually wasn't even on their website. You had to get the email from Jim, and then he would give you a private link that wasn't published to actually download their CA and everything. So I guess whatever that is, I'm not sure if that's fully off market or if it is, but that's what it was. And it took us about 12 months to get to that relationship. And I'd kind of put broker relationships on the back burner slightly because we were raising capital. But then when me and Van got reinvigorated by it, I started reaching back out to brokers. We went and toured the thing. Honestly, we weren't sure how the guy took us first glance, just because we came in young, and I think that he was kind of expecting to see some other people showing up. And I honestly think that tour, in my honest opinion, I don't think that tour went very well for us, but we sent an offer in within 24 hours.
Why did you feel, hold on, so why did you think it didn't go well?
Just because the guy, well, number one, what did he say? He said, just so you know how these things work, best and final is, and explained it to us what best and final was.
No, we're good, dude. Go Google my name.
I've closed deals before, bro, I promise. Yeah. So he gave us the basic definitions of stuff, and we were like, oh man, this guy doesn't know who we are and doesn't think we can close. So we were like, thanks for showing us, and I sent him an email we'll promptly give you our underwriting and show you our LOI. So we submitted an LOI, official LOI, with our all of our partners on there, me and Van's criteria, our history, and also the underwriting, the exact NOI that we got to. And that NOI we wrote.
How quickly after the tour did you do that?
I think that might have been the same day in the evening.
Yeah, it was within 24 hours, and his demeanor totally shifted.
Yeah, his demeanor totally shifted because the LOI was legit. And really well written. And then also the NOI we had, we listed all the way out to the dollar.
Wow.
And their mortgage broker actually got the same dollar for the NOI.
No way.
So he was like, I don't know. He was like, you guys are on the mark. I've never really cared about this, but this is weird. And you want to get coffee. And so because I don't know, we were in our 20s and we got the same to the dollar. It's a 6-figure number. So they were just I don't know how you got that NOI. I don't know why we have the same NOI, but
that's out of our hands.
Yeah, that's definitely not a planned thing, right? We you do your best and you send your NOI as accurately as you can, and then whatever happens happens. But that guy, I think after that conversation, the mortgage broker side of Newmark was very interested in us and was like, hey, Jim, I think you should probably take these guys a little bit more seriously. And then we kind of got his blessing, and then through him, we got Jim's, and then now like they both are big fans, and we're hopefully going to be able to do deals with them going forward, even though we lost this one.
So boil that all down to an action point and the fundamental there. So the fundamental that I heard was, they're looking at you guys, and just from like an appearance standpoint, they're like, hey, because what was the equity that was needed for this? $3 million, $2 million?
Yeah, somewhere around $3 million.
So he's looking at you guys, and he's like, wait, where's $3 million going to come from? Like, I'm looking at their last name. It's not Cook or, Bezos. So I don't understand like how these kids are going to come up with this money. And he's writing you off. You guys probably sensed that.
Mm-hmm.
So, and you guys knew that. So you guys went back and submitted like a legit email with underwriting, your bios, your track record to overcome what you felt like was them writing you guys off instantly.
Yeah, I mean, we sent a legitimate LOI with our terms and our closing dates and our earnest money and when that would be released and our contingencies and everything.
So it's probably the most legit email he got that entire
I guarantee
month.
he didn't get a better email from anyone. And we've
probably a higher offer.
Yeah, and we also had the highest offer, but it's just like, we lost on terms at the end of the day. But like just doing your best to know what you're doing, I think is the antidote for it all. I mean, I know that's such a boring answer, but ultimately like educating yourself and like putting in the really hard work to, number one, know how to underwrite really well so that you can put in a good offer and NOI can be accurate. And then also spending the time to ask around the industry, what's a really good LOI look like?
Right.
And how can I copy that and utilize it for my offers? And then not getting in your feelings too when someone writes you off at a tour and kind of makes you feel like a little kid, like still having the poise to go home and just be a professional about it and send them a good email.
I feel like I've been that guy like my entire life. I feel like I've just been that underdog. Like people would look at me. I think even basketball, I just think as everyone was so much taller and faster and this and that in a layup line, they'd be like, who is that kid? Like, how is he even on the team? And I've felt that way so many times. I can't tell you how many times I've felt that exact same way, just in different circumstances. Maybe not specifically on a tour, but just in the process of building this company where it's like, how am I, they're looking at me like, how is this kid even here? Why is he in the room? How does he, bankers, broker, the whole thing, property managers, everything. And I think that that's really fueled me, and it's like helped me get better and motivated me. And so I think that like leaning into that feeling can actually be a really positive thing, which sounds like what happened in this circumstance. So walk me through, you guys missed out on the deal. You guys kind of gave the spoiler away, but walk me through that process of how you guys got to the end of it and what the learning lesson was from that process.
Yeah. One thing I wanted to touch on too, like we said at the tour, he kind of like was on the fence. He's probably like, what are these kids doing?
Right.
And then we sent that LOI in and he probably went, whoa, okay, these kids are either really dumb or they're going to close. Like there's no
in between.
Yeah, there's really no in
That's
between.
actually a great point. Yeah.
Like these kids have absolutely no idea what they're walking into, or
they're legit.
They're closers.
Right.
And I think especially like having the same NOI was like, whoa, okay, it probably leans him towards one way, and he started really getting on the train. Like once he decided that we were,
he became like a fan.
Exactly.
Yeah.
No, that's
like,
what
hey,
he said.
Do you have
like,
an extra T-shirts?
When we lean into being young, like you lean into the being young thing. I think once he kind of was bought in, it sailed. Like, because then he started talking about how, we invested with these younger guys and they're killing it now. And like, I'm super excited. Y'all are young. Like we want to have a long-term relationship and stuff. And he was like fighting for us. Like he really wanted the deal to go to us and stuff. Which, could be broker talk, but I mean, for real, we had the highest bid. I mean, he was probably, there's other reasons he would want to argue for us.
So the reason that deal didn't go our way, to answer the original question, is like we did have the highest offer at 7.6 on a 72 unit, which was higher than their even asking price. So we kind of expected like, hey, we're going to get this deal. Like we're offering over what they want. But another group came in at, I believe, $25K lower on purchase price, but 0 days of due diligence and $100,000 non-refundable day one. So just a large firm with like a lot of capital. And you can't really compete with those terms, honestly. And at the end of the day, the seller makes the final decision. So the broker and the mortgage broker wanted to work with us because we were going to give them the listing on the back end. So they would get commission selling it to us right now and then also selling it for us in 5 years. Yeah, which was actually your tip. So shout out to Terrence for that, because we actually would not have thought of that without your guidance there. So I appreciate that. And he definitely lit up when we said that. So I think that's a great like tangible tip is if you want to use more leverage, because he was asking us to go hard day one, and your advice was basically like, you can't really do that. That's not a good move. And we agree with you. And so our leverage point, since we couldn't go hard day one with money, was let's try to give this guy the listing on the back end. So he's going to make commission when he sells it to us, and then also when he sells it for us. And then also we were going to use them for debt, their in-house mortgage broker too. So they were going to get the origination fee on us too. So they were going to get feed up basically.
Yeah,
they were excited to,
money.
they were excited to work with us for all the fees on that $7 million figure. So they want to work with us going forward just because we conducted ourselves in that way. Even though we couldn't get the seller's approval, they were pushing.
Yeah, and I think the key there is what I've learned from other people that have helped mentor me is just the empathy piece. Is if you put yourself in the other person's position and find a way to align interest. And so if you're like, okay, I'm not going to go hard with earnest money and compete with that, but how can I find another way to get this guy that's a really key player in this transaction, get him on my team? And, money normally is that. And so, I think that that's a big fundamental piece for people listening is how do you align interest without putting yourself at risk? Because, when you're syndicating a deal, you're using other people's money. And so I think my advice on that deal when we were talking about all this several months ago was you can't, that's not something I've never done that. I've never, because it's just not a prudent thing to do until you've been able to do your due diligence because you're playing with other people's money. And you just don't want to ever put yourself in a compromising position because there could be foundation issues, mold issues, there can be a lot of delinquency they haven't disclosed. I mean, there's so many things that can come up through due diligence, and especially in your first deal in Nashville or in Austin, and a new market for you guys. That wasn't something, but aligning interest with the broker was definitely something that could have worked. And I believe that will come back to
absolutely 100%.
Be a ton of value for you guys. Okay, so this deal didn't work out. You guys learned a ton of lessons. You built a valuable relationship. And what are you guys trying to do moving forward?
Yeah, and this kind of ties into this deal as well. But like one reason we were actually going to make this deal work, and we're going to make pretty much any deal in Austin work, is we're going to manage it ourselves. So that's kind of part of like the being young and scrappy, and like we have the freedom. Like we don't have spouses or kids or jobs potentially in the future and stuff. So like we have essentially all of the time in the world to go run this thing full time. And so we're going to get really creative, and we can like cut payroll costs. We can cut essentially all of the property management costs. And that's kind of what we're looking to do. So we're looking for like stabilized things. This is a, very textbook deal of like what we're looking for. Like a pretty big, around 100 units in Austin that we can get in, value add, like garden style, 2-story, 80s type build.
In Class B, right?
Mm-hmm.
I mean, so it's not like dilapidated. There's not a ton of outdated CapEx, but it's just a Class B property. You guys can incrementally add value. You guys can cut expenses.
Right.
Is that pretty accurate?
Oh, absolutely.
Yeah, and it's really cool too, the opportunity like that's being provided like in North Austin. Like the amount of B/C location is very quickly decreasing in Austin. So it's like obviously super, super hot area. Mm-hmm. It's going to be even hotter because not as much product could get traded in 2020. So there should be like a ton of opportunity in Austin.
Yeah, and I mean that area that we're really looking at hard is that Domain area because they're building a new MLS stadium up there.
Yeah.
And the city's investing, hundreds of millions of dollars to make sure that area doesn't go the wrong way. Because typically when you put a big sports stadium in a location, two things happen. Either the area becomes very nice, and everything comes up around it, or it destroys the area.
Wow.
So the city is spending hundreds of millions of dollars to making sure that stadium is just going to lift the prices in that area.
Wow.
And also, since it's near the Domain, which is what they're, coining the second downtown of Austin, they're trying to, also grow that area. So if we can get around there in the last little pocket of B and C that is in that area, hopefully we can take advantage of the new MLS stadium, the Domain being coined the second downtown, and then us finding that last little sliver of affordable housing, and just adding a lot of operational benefits since we are on site and we are in-house and we are going to be self-managing.
Yeah.
So we can cut, like Van said, payroll, a lot of different things with repair and maintenance so we can cut and things like that.
Yeah, you guys have the time, the energy, the hustle. You guys are going to be able to be scrappy and just really outwork, I think, your competition. And that's really what property management comes down to is, can you find creative ways to solve the maintenance issues? Can you find creative ways to get tenants in there faster and at market or above market rents? And I'm really excited to see you guys close your first deal and be able to execute for your partners.
Yeah, so one question I want to ask you guys, because, a big theme that Terrence and I both had in our, personal lives and professional careers is just, we've had some great mentors along the way. we still have mentors now. We mentor people along the way. But I want to ask you guys this, like, if you want to go first, like, who's been some great mentors along the way? Because you guys have definitely accelerated your investing career path, being in your early 20s. Like, what mentors who have they been, and who's giving you really good advice over the last few years?
That's a good question.
I can take it. I mean, number one would be Terrence. I think, honestly, we've been having monthly calls with Terrence the last 2 or 3 months, and honestly, those have been huge. Just asking him questions about property management, getting the fire back about managing real estate's been huge. So that would be very high up there. The other mentor for me would be a guy, Lalo, who was the first person who invested with me.
Wow.
Because it was really difficult to get anyone to say yes. But once he said yes, he kind of told his friend who owned a law firm, and then, vouched for me there. And his friend was like, I don't know, are you sure about this kid? He was like, no, trust me, we got this.
Wow.
And then his blessing kind of led to more blessings from that group. And really, it just takes one yes. And I think that's something I really want to leave listeners with is if you think it's really difficult to raise $1 million, it's really just 10 yeses. And once you get that first yes, it's a lot easier. So you really got to stop thinking about the number 1 million and start thinking about I just need
yes.
one yes, literally just one yes, not $1 million. And if you can find one person who will believe in you, things will snowball. You just got to compartmentalize and think about that one person. So I would say Lalo, being that first domino, honestly, has just been huge as well.
That's awesome.
Yeah.
It's really cool.
I think to kind of go chronologically, my first mentors, I guess you could call them, were the YouTube guys. So I hopped on YouTube University and I started learning as much as I possibly could about just investing in entrepreneurship and stuff. And I guess I would consider Gary Vee, really a guy who, I went from knowing nothing about the entrepreneurial world, to completely being just enthralled by it. And so then leading into kind of real life people, once I got into this space, Andy was definitely the first guy who kind of took me under his wing and said hey, I like you. Me and Andy, it's, more than business. He's helping me out just personal life and spiritual life and stuff. He's just really, really cool dude. Super glad to know him for, hopefully the rest of my life. And beyond that, kind of leading me into Matt Faircloth, getting to meet him. And that was the first time that Matt Faircloth is probably the biggest, honcho operator I've talked to. And he really talked to me as an investor. He was not oh, wow, you're 21. That's cute. That's all. He was yeah, so we need to raise, this is how you get the, the self-directed IRA into the escrow, blah, blah, blah. And that was really cool. And honestly, I feel every time I talk to him for 5 minutes, I get a year worth of knowledge out of it.
Wow.
And then leading up to now, seriously, like Kyle said, you are definitely my biggest mentor, role model that I would consider what do I want my business and my life to look like when I'm, in 10 years, 15 years, definitely model after what you're doing.
That's cool. That means a lot. I've super enjoyed getting to know you guys. You guys are super impressive. I hope my son, Noah, grows up to be like you guys, and really impressed. I can't wait to invest in your deals and to continue to do a lot of business together. One of the last questions we had was talk about, it's called the Tribe of Multifamily Mentors. We talked about mentors. Another thing we want to ask all the guests that come on is, what would you describe your superpower? What would you say that you do best? Talk about that, expand on a little bit, and then we'll close up.
You want to go for that?
Yeah, so I think my superpower is kind of like Kyle hinted at earlier. I'm very introverted, not in the sense of I don't like people, but in the sense that I just am in my head a lot. And when I'm in a conversation, I just naturally hear a lot of what the other person's saying, and I'm really good at listening. And I think, again, that was kind of my gateway into this entire industry, is just hitting up as many people as I could and not trying to sell them anything, not trying to work with them necessarily, just tell me about you and how amazing you are, and I'm going to try to pick apart what I can learn from it. And I think in general, that's just just being a listener, and I think humility too. That's something obviously I always have room to work on that, but I think I genuinely just sometimes don't know if I'm succeeding or not, because I just never even think to question it. I just kind of always assume there's more to go. So humility, I guess.
Cool.
Man, for me, that's a hard question. I feel it might just be, working hard and not quitting and always believing in myself. I think I've believed in myself in a lot of ways in my life, with soccer, getting to where I was there, and in real estate as well. I try to not let myself question some of the things I'm doing, as far as, am I capable of doing it? I'll question, obviously, my strategy and things like that, but I try not to question the result or my capability. I think that comes from just understanding that a lot of people can do these things. Most people can do these things. Like you can too. And the only reason you're hearing those thoughts is just fear and it's not real.
Yeah.
And if you can move past that, I think I've gotten pretty good at that just from athletics. And, you know, when you do play competitive sports, you're coming up against other people who are trying to intimidate you. And basically, if you don't believe in yourself, you will like absolutely get ran through in competitive sports. So just like not allowing your mind to go to that place and be like, oh man, this guy's really scary. I don't know if I can play.
Yeah.
You know, you just can't let those thoughts come in. And I think like if I have a superpower, it's just not letting my mind go there when it gets scary.
And one of the other things that you haven't really touched on, but I do think is a superpower, and you've actually helped me with, is you know how to tell a story incredibly well. And it's not by accident, but you've actually studied that. So one of your superpowers is definitely knowing how to tell a story, and you need to give yourself more credit for that. And I think that question, the root of that question really comes down to a Gary Vee principle, which is being self-aware. And I think for the audience, you know, understanding and knowing yourself, and I think Chris, you've talked about, you know, this is why Chris and I are partners, and you know, even here today is, you know, when you know your strengths and your weaknesses, it allows you to make strategic decisions on who to partner with. If you know yourself, it's like, hey, these are the 2 or 3 things I do really well. This is my superpower. I need to find someone that is really strong in an area I'm weak in, so their superpower is my weakness. And that's how you form strategic partnerships that add a lot of value to each other. And Chris and I are an example of that, because Chris is obviously really good at what he does, which is marketing and that kind of thing. And that's not my strength. And it's worked out really well for us. But I think the root of that is just being self-aware.
I agree. All right, guys. So where can people find you, and what are your future plans with everything?
Yeah, I think the best place to find me is probably just my website, kylemarcotte.com. That's KYLEMARCOTTE.com. And there's a ton of free resources on there, like podcast, a guide for best podcasts and books and study questions to ask yourself, and different breaks real estate investing down into like 3 phases of learning and questions for each phase, podcasts for each phase, books for each phase, so that you can start to get into it. It's called the Newbie Investor Guide. And then there's also my podcast and some other resources on there as well. And you said plans for the future as well?
Yeah.
Plans for the future are really just buying 75 to 150 unit buildings in Austin with Van.
All right.
Love it.
Well, what about where can people find you at, Dan?
Yeah, so you can also find me at my name website, so VANHAGYE, vanhage.com. I also have a couple resources there, so like free underwriting models, free resources as far as like learning, a couple ebooks on like raising money and getting in deals and stuff. And then also we're going to be starting the Hive Mind podcast, which by the time you're listening to this is probably live. So you can check that out, Hive Mind.
You tell us the name behind it. I love
Yeah.
it. What's the name? Where'd the name come from?
So the name came from a lot of our mutual friends. When they see us talking about a specific topic that we both are passionate about, we kind of morph into like one person. Like one person is slightly smarter than each of us are individually, and they kind of call it like, you know, our like collective consciousness or hive mind or whatever you want to call it. But I guess that's where the name comes from, because we hope to talk about things that we both are interested in and kind of have that like mesh. On air.
And other than that, you can also find me on social media.
LinkedIn. That's where we met.
LinkedIn. Oh man, dude,
He crushes.
I could not
crushes
recommend
LinkedIn.
enough people to hop on LinkedIn, and also like Instagram and stuff. I'm trying to like move to become more like active on that, and like, you know, let go of my personal life and let it, you know, kind of like morph into real estate. So I'm super happy to like talk with anyone on anything. So
Great. Well, we'll put all those links in the show notes for sure. Guys, thank you so much, man. This was
You guys crushed
great.
it. That was awesome.
We look forward to seeing you guys grow and continue to just buy more buildings over the next couple decades.
huge honor to be here. Thank you.
Yeah,
so
thank you for
much.
having us on.
You're listening to the Multifamily Mentor Show.
Join the conversation.